In fact, talking about Tata Steel, let's welcome on board Koushik Chatterjee, ED and CFO Tata Steel, joins in on the show right now. Koushik, morning. Good to have you on the show. What are the key pointers in which the Commission has hesitated to give the nod for the Thyssenkrupp deal?
So it's not any one or key points. It's basically the way competition law in Europe is structured. It looks at potential market play on account of mergers. In a merger, you can have many form or methods of merger. Typically, when you have multi-geography mergers, you have one form or structure in each geography. If you have one geography merger, you would typically not have the ability to take out huge overlaps, which is possible in a multi-geography merger. And therefore, one has to look at what are those elements that the competition authorities look for to clear merger control. And in this case, they had concerns in terms of market play in a few segments like automotive and packaging. Even though we are not going to be the largest in those areas. We believe, offer a comprehensive package covering the concern areas, but the Commission feels that perhaps does not pass through from a customer's and competitors' point of view, and that's been the cause of their reluctance to clear it.
Okay. You mentioned that all options are on the table. So what's the deal? What's the plan B that would work perhaps for Tata Steel? And what would the ideal restructuring be that would be able to pass the EC checklist as well?
No, I think there is a, when you look at these kind of situations where when the ask becomes larger, then at a point in time, any further remedies, as it is called, starts to impact the foundations of the very economic and industrial logic for creating the merger. And steel is a business which, by the very nature of the assets, they are integrated. They are complex. There is a very deep value chain that resides between the upstream, midstream, and downstream. So it's not just a few slices of cake on the table that you can slice it and dice it. There is a definitive logic or reasoning of the asset configuration, which helps any company to meet its customers and meet the supply chain requirements, and also meet its competitiveness, because stranded costs are very important. So when the ask comes to a stage where it fundamentally alters the economic logic of the intended economic logic of the merger, that's when any shareholder or shareholders would review whether that is worth it or not. And that's what the situation has come to.
Turning around for Tata Steel Europe compared to what was 2-3 years ago, what did Thyssenkrupp consolidation hold in store for Tata Steel?
So there were a couple of strategic objectives to follow. One was to create a sustainable asset footprint in Europe. And this consolidation would have enabled that to happen, because it has got a strong industrial logic. It is sustainable. It would have allowed the combined entity to invest in customer centricity. It would have allowed it to invest in R&D. It would have allowed it to take out of costs and be more competitive from a overall. So it would have been an all-round positive impact on the geography, and as also on the steel sector in Europe. So if that doesn't kind of happen, then one has to look at alternative options, and that's what we have said, that our strategic intent or our strategic outlook on what we set out to achieve has not changed and will not change, and we will look at other alternative options.
Well, the real earning casualty today is actually Eicher Motors. 6% down for Eicher Motors. 30,000 plus has become 19,000 in less than 15 months. The most haloed stock, Eicher Motor, everyone just loved it. It was like the darling of stock markets. And, you know, the general view was that Indians will only stop buying cars and they'll only buy bikes. Nobody will travel without a bike, and the only bike they'll buy would be RE. And you know, that's what typically happens when you are in a very you know, strong kind of in bull market. Market ignore the obvious that all markets, everything follows a cycle, and the mean reversion for, I guess, RE demand or for RE as a product was evident. They've not upgraded their platform. It was a culture which really made all the difference to Eicher. It's a great company in terms of, you know, managing return ratios and, you know, where their credit cycle is. But if demand for a consumer company slows down, you know, it's a judgment call whether this demand is cyclical slowdown, it's a structural slowdown. And on the top of that, you've got new competition which has come from the Bajaj, BMW, and from the Triumphs of the world. It was overcrowded stock. There were certain funds which were getting inflows, and those funds were buying these stocks again and again. Those funds are getting outflow. So irrespective of how the attractive valuations are, right now the same funds who were buying the stock or chasing the stock are dumping the stock. So markets are in a mood to punish autos. They're magnifying all the bad news. Markets are in a mood to reward corporate banks, so they're ignoring all the bad news and they're overemphasizing on all the good news. But with Tata Steel, I guess the problem is more related to the commodity cycle per se. So Koushik, what would be the prime objective of any deal, or how are you planning to deleverage the balance sheet now?
A combination of this nature would have helped in deconsolidating the business and therefore achieve a certain level of deleveraging. In my view and the way we look at it, we do not see any change in that principle. We have already reduced significant amount of debt in the last 6-7 months post the Bhushan Steel acquisition on a consolidated level. We had announced in November 2018 that we will reduce $1 billion, which is about 6,500 crores. I think we've done more than double the reduction, and we continue to focus on that. So under no circumstances will the deleveraging principle or strategy get diluted.
How much EBITDA, Mr. Chatterjee, would Europe be able to deliver, and how much is required for Europe to sustain on its own and not take funding from India, you know, cover its own capex and interest expenses?
Yeah, so somewhere around the region of 400 to 500 would be good to break even from a cash flow point of view. And it also is important to ensure that we focus on further cost takeouts in the year.
And will Indian capex face any problems now that this mega debt reducing deal is off, or are things on track there?
See, if you look at the mix of the India capex, a significant part of the India capex is currently on the Kalinganagar expansion and the related capex and raw materials, etc. So we have reworked the capex in a manner such that we can commission the plant in phases, the second phase, ahead of time in a manner such that the cash flow starts coming in. So I think we don't see any adjustments requirement there. India will also be looking at other areas of monetization, including asset sales and business sales and so on. So I think India is in good state. It is we are driving integration in both Bhushan and in Usha Martin, and we will certainly put all our focus in driving those cash flows to sustain the capex levels. And after Kalinganagar expansion gets completed, we will have certainly increase in two things will happen. One, the EBITDA will certainly increase, and we are talking about a value-added product mix, and we're talking about 5 million tons of capacity. And secondly, the capex will come down. So we just kind of need to focus on these two objectives, and we will have an acceleration in the deleveraging going forward once the commissioning of the Kalinganagar phase 2 happens.
Right. Koushik, lastly, a word on the impact on steel prices you expect because of the entire US-China trade tariff situation. Will spreads compress again after that rebound from the December low, and again, especially in Europe, because that region is so vulnerable?
Yeah, so I think the one of the biggest uncertainty across all industries today is how the trade tariffs will move, and what's the kind of end state or stable state on trade. So it has been volatile, and there has been softness in recent times, but I think we just hope that it comes to a final state so that speculative tariff doesn't impact on the prices, and secondly, the tariff barriers don't kind of become hurdle towards economic growth across the world.
Koushik, great to have you on the show, and thanks so much for, bringing about that clarity on what really is going on with the company with regards to Thyssen Krupp.